Hi guys, it's Tom here again. I thought I would do an update on the ideas I had for a private currency system alongside a state currency system, and sort of what type of things that who it could benefit, what the implications would be, and how it could be put in place. Well, at the moment, the government has nationalised quite a few of the banks, and for those of you who know a bit about financial history, there's been a few times where the country's debt in certain parts of the world have been transferred into shares. Well, what we could do in the UK, possibly in America as well, is we could do a debt for equity swap. So the holders of UK debt might be able to transfer their equity into shareholdings of the banks. And that would be great, because you would have private shareholders looking after banks, which would be great, and it would also pay off some of the UK debt, which is also a great thing. So otherwise, we're going to have to pay the debt anyway, and as interest rates rise, as they're sure to do, because of low interest rates at the moment, unnatural low interest rates at the moment, and the money printing we've had, and the UK economy sort of collapsing basically as trade barriers grow up, what do they call trade barriers rise up across the world. We'll be able to export less of our goods, and it's not really a good thing. If people are going to get super serious about these sort of alternative currencies, what you could do is give these new banks a mandate to, as gold lending banks, and they'll be able to give out their own currency, a sort of gold-backed currency. In practice, how you could do this, either you could transfer your holdings of gold from one of these gold vehicles like an ETF or gold money or whatever into the bank, and you could earn some sort of interest off it. The interest you've got, maybe you could decide how much interest you want by the amount of risk you're willing to take with your money, what sort of reserves they have of actual gold, what ratio of gold to lending. So what would this do to the sterling? Obviously it would put pressure on the government to compete with this new currency, or these new currencies if there's more banks with these charters. And to stop everyone fleeing out of the sterling and into these new currencies, they would have to raise interest rates on sterling, or just give a real interest rate for sterling instead of one that's below the rate of inflation. They'd also have to stop quantitative easing, and they'd also have to run a tight ship. They wouldn't be able to borrow as much, obviously. Otherwise, the interest rates would just go through the roof. This was done before by a guy called John Law, who did the Mississippi bubble in France. Well, he didn't do it, but he was one of the prime people involved in it, as well as the Duc d'Orléans, who was the young king's sort of regent, the person really running the show. His spending habits got a bit out of hand with this central bank that had paper money. the company they founded, John Law sort of chartered the Louisiana Company. The people that went over to Louisiana, Louisiana's called Louisiana because it was named after King Louis, who was the person John Law was sort of sucking up to. And it failed because the amount of money being printed, which went into shares, there wasn't the economic return from the company, because it was just a swamp, basically. Anyway, I'll carry on thinking about this. If you guys are interested, please comment. It'd be great, as always, to have a few comments. You can subscribe if you really want to hear more of my waffling. And please rate the videos, see what you think. I haven't heard any videos on this type of thing so far. Anyway, have a good day and see you soon. Bye bye.